Hi, I'm here today with Suranjana Borthakur, the Head of Distribution and Strategic Alliances at Mirae Asset Mutual Fund. My name is Vikas Thoot. I am the Resident Editor of the Business Standard in the New Delhi office. And I've got this opportunity to talk to Suranjana about the way in the last two to three decades, how the journey of a mutual fund investor from the buying side and the industries, distributors and industries sales teams on the selling side, how that has evolved. So, Ranjan, I know you've had a long career through this industry already, or nearly 2 decades in this business. Could you give us a sense of how things were? A lot of the Gen Z people may not know how 20 years ago Indian mutual funds were sold and bought.
I think a very relevant question in today's time and age. What is happening is I think the investor's journey is definitely evolving. I think what is happening is with the awareness which is increased in the financial space, people are not just looking at buying product, they are looking at moving towards solutions, moving towards actually recognizing why they are investing. So probably planning better for their goals. So from if the investor's journey is evolving, it is therefore also important for the distributor's journey to evolve as well. I think when we look at the distributor's evolution, what I see as a little bit of a gap is the fact that if you look at the savings pattern of India, of a Indian investor, just about 10% of money lies in the equity. But what happens is when we look at growth of AUM, a lot of people look at equity AUM growth as the growth of their total AUM. Actually, the other segments are really left out in many ways, or maybe there is limited exposure there. While that also defines the risk appetite of the client. So if they are allocating limited towards the equity segment, which means the risk appetite is limited to that much. So it is important that we not look at just selling products, but at actually getting the wallet share of the client. So that is actually an evolution which is happening, but still a long way to go. I also feel that when you look at the journey going forward, it is probably going to be more important to look at the newer segments. Like for example, gift. Gift is offering so many new solutions which are coming in and catering to requirements of people. There are passive products where a lot of innovation is happening and a lot of new things which are coming up there. There is also the segment of probably the debt which has been because of various reasons been overlooked to a certain extent. I think that's also for a holistic actual client growth or portfolio growth to happen. It's important to be open to all ideas, and which is where from client's point of view as well as from distributor point of view. But like you asked in terms of the evolution of the journey, I think investors have there are different generation of investors today in the market. Some of them, like our parents, would have probably looked at more of real estate or gold, limited to that. Maybe we were more open to looking at mutual funds and equities. But when you look at the Gen Z, that's a different risk appetite altogether. So they're looking at very, very different segment of products. So we, as a manufacturer, we have to cater to all of the requirements. Distributors will have to look at what fits into the client's portfolio.
I know that distribution has evolved in many ways. Digital platforms have also, made given you different avenues to reach the customer. But there is this tendency among, as more and more investors learn about trail commissions and stuff, there's a tendency among many of them to say, go for direct investing. Go to the website of the mutual fund, pick any fund that they're got a fancy for or they heard about from some friend, and invest directly so that they save that 0.5% or whatever of trail commission.
Yeah, absolutely.
Do you feel, I mean, in a rising market, of course, all of us feel like we picked the best mutual fund because it shot up, but everything shot up. Do you feel there is a sensitization of investors needed to help them understand that there is a certain value that a financial advisor or a distributor who's telling you which fund to buy at what time brings to the table, and how do you sort of get that across to investors who are otherwise click happy?
Yeah. No, I think this is again big debate, I think, everywhere. W- See, when investors are starting, there are a lot of new investors who have come into the industry in the last few years. If we see before COVID, maybe there were about 2 crore investors in the mutual fund industry. In the last, now it is crossed 5.5 crores. So that is where, the new investors who are coming in, a lot of them are actually using the digital medium or, apps to start off with their journey. But what I see as a trend is that, once people end up saving enough or creating enough money through investing, where they don't want to lose that money, they actually need the help of an advisor. Like you rightly mentioned, when the markets are doing well, then everybody feels that, they have done it on their own merit, but may or may not be true. If somebody has the time and energy to be able to dedicate to only investing, then yes, because this is a full-time job. There's a reason why you probably give your money to a fund manager, because that is their skill set, that is what they're doing day in and day out. Everybody may not have that skill set and the time. So if you are able to do it on your own and you think you have the capability, please go ahead and do it. But we always say that in a journey, we say that in the investing journey, sarthi zaruri hai is what we say. So it's always important to have somebody who can guide you during the volatile times. So it's actually the behavioral patterns of clients which is one of the biggest factors which helps you either make money or not make money. So
Right.
if you exit at the wrong time, if you keep on changing products and not let your money compound, you'll never make wealth. The guidance of the distributor or the person who can, or an advisor who can actually help you do this, has a lot more value when you look at the long term. Actually, they will be able to tell you not to take those, just the momentary call that today this fund is not doing well, just get out of it. That is something everybody may not be. We can't have control over our emotions always as much as we think we can. So that is where the guidance is very, very important. And I think it's a journey, it's an evolution. Everybody has their own journey of recognizing this problem and then,
How is Mirai working with its multiple distribution channels and partners in terms of ensuring that the right messaging goes out to prospective investors, and in terms of ensuring that they are more positive about Mirai than say other rivals in the mutual fund business?
See, when you reach out to clients in the industry, if you see, I think for us, investor education is a big part of what we do. I think it is not about Mirae vis-a-vis another fund house. It is always about bringing them up the curve in terms of the knowledge. I think one of the while we are right now talking about 75 lakh crore, etc., of the market size of mutual fund, look at the participation of households. It's still very, very limited. So people are still not aware of very basic things. In the last couple of years, with this boom in the market, a lot more new people have started looking at this space. But the journey is long. So where education, upgrading on knowledge, this is a part which is very important. And we strongly believe that if we are able to cater to this requirement and we are able to actually get the right message across, not from a product selling point of view, but from a process point of view. Because a lot of times the questions from the client would be which product to invest. But that's the last part of the journey. It is actually how do you start your journey? What are the things you have to keep in mind? How do you plan your goals? What is it that is important in asset allocation? Asset allocation is so not talked about, whereas we know surveys say that more than 90% of your returns come out of asset allocation, not out of anything else, not out of timing the market, not out of product selection. So these are things which people need to actually learn over a period, and which is where we are trying to do more investor awareness around this, and of course handholding distributors to be able to upgrade their journeys as well. Yes.
What do you make of some of the new investment categories within the funds universe that are gaining a lot of traction? Passive funds, ETFs, of course, though they're not strictly a mutual fund product, I would argue, and also this initiatives by SEBI, such as SIF products and Choti SIP. How does this sort of require you to change your playbook?
I think it's an essential part of the evolution journey. We are, as an industry, we are becoming larger, so we need more types of products and variety to be able to offer to clients. If you look at us as a manufacturer, I mean, globally, if you look at patterns, passive is such a large part of allocations when you look at client portfolios, right? In India, the journey is just about started. But if you look at just like 5-6 years back, the size of the passive market, and today, there's a huge upside which has happened, which is where awareness is increased here. I feel in India, there is a lot of debate between active versus passive. We are not in that phase anymore.
Right.
It is active and passive together, but a lot of ideations can happen in the passive space, because in active, the categories are very well defined. The potential to ideate is much more or broader in the passive space. So that's where you will keep getting new ideas. So people have to be open to that. The other is the SIF part, as you mentioned. That's one of the newest parts of the market which is evolving. I believe, what has happened is a lot of investors have wanted curated, differentiated products for themselves, but the accessibility has been limited because the alternate products have a certain cut-off size that you can't come below that amount. And now this coming on the mutual fund platform, SIF actually becomes very tax efficient also. So it is giving an opportunity to have differentiated products, tax efficient product, which can be then offered to the client on a size and scale which is accessible to the mid market clients as well. The gift is actually one of the most interesting pieces. If you see, there were limits which were put on money that you can actually invest outside of India earlier. Just when people were starting off with doing their global allocations, that limit was set on the industry level, which is where gift came in. So gift actually has today not just catering to the global requirements, global investing requirements people have, it is also catering to the money which is coming inside. So basically, the NRI money or the foreign national people who want to invest in the India story, it is giving opportunities to invest there. So both sides are actually evolving. People do want to diversify beyond just India, and people sitting outside want to come into India. So it's basically bridging the gap for both.
So, given all these transformations happening, as the head of distribution and your other role, the head of strategic alliances, I think you will have a busy time ahead in the coming years also to, keep evolving with the changing times. So, we hope to be able to catch you again and, discuss how things are going, especially on the new innovation that you just talked about, including SIFs and Gift City. Maybe if you're free sometime next year, this time we could catch up again on the same issue.
Sure, would love to
Thank
do
you.
that. Thank you so much.